if you maybe want to introduce Matt.
Yeah, absolutely.
Yeah.
So Matt Van Dyke is my partner here and another general partner in Hall Venture Fund. And Matt has spent 10 years prior at PwC, so is an expert in tax, and really was solving a issue for the Hall family, and noticed that there was a larger opportunity to be able to be inclusive to other investors that had similar issues with capital gains and wanting to make investments into communities where they could help kind of grow jobs within that space, as well as overall income. So if Matt's on here, I'd loved him to join and introduce himself.
Yeah, so thanks, Dave. Hopefully you all can hear me now. So appreciate the introduction. I appreciate also the time and the effort that's been put in for this particular webinar. So I really started looking at opportunity zones with communication from Provo, saying that we fell within an opportunity zone. And as I started to look at the tax ramifications of that for us and the possibilities of that, I grew very, very interested and had to really look through the code sections and regulations. And at the time, there just wasn't a lot of information out there because it was such new law. And so we've had to navigate this over the past, what's it been, almost about 3 years now, 2 to 3 years, just to make sure that we could check all of the boxes for the operating businesses, because anything associated with staying in a particular space or showing pure economic value is a lot easier in real estate than it is in an operating business, because operating businesses are organic and can move and grow and show economic growth and ramifications outside of that specific area. So it's been challenging, but it's also, I'd say, one of the more rewarding ways to be able to apply opportunity zones. So I'll just pause there. I don't know if there's any.
Yeah. Matt, while I have you here, and I think one of the things that I'd like people to hear is, what are some of the biggest challenges that you found in applying opportunity zone incentives to operating businesses? Am I opening up a can of worms here, or can you just hit some major components that you think would be really beneficial for people to know?
Yeah, so I think a couple of realizations that we went through. I'd say the first one is the tangible asset test. That's a big hurdle, especially for I'd say existing businesses that were existing prior to I think the cutoffs around 2017. So you have to have a large amount of tangible assets that get placed into service, and so you want to make sure that that's kind of check the box. Before the clarification on the regulations came through for inventory, that was a major concern for us as far as how you count that is toward your tangible assets. The reason why that's such a big concern is if you decide to include that, where is the inventory located and when does that actually transfer hands? And if you use like fulfilled by Amazon or others, that inventory can be all over the place. And so trying to track that into different locations is a big issue. I'd say that making sure that the documentation, I'd say that there hasn't been, from what I understand, there hasn't been a lot of audits associated with opportunity zone kind of classifications, and putting together the documentation necessary that will withstand an audit, right, to make sure that you were very thoughtful of making sure that all the things were checked the box. And I'd say the biggest challenge on a go-forward basis is really associated with how do you stay within the bounds of the opportunity zone. So it might make sense today as a new startup company, but again, those companies are dynamic, and how do you grow within the holding period, right, of 10 plus years to maintain that opportunity zone business status during that time period. So I'd say that's the biggest challenges on a go-forward basis.
Yeah, and I want to say Matt ends up being the back-end support, which is something that was mentioned early on in this conversation, right? So I'd like to transition slightly and Chad, ask you, what does that back-end support mean to you? I mean, there are maybe some people here that are thinking about, man, I want to structure a QOF. I want to start a QOZB. I don't have that backend support. It's one of the reasons why we created OZworks Group, is to plug people into resources and make connections so that they could build trusted relationships with people. But what does it mean to a CEO to have Hall Labs be supportive in that way?
Yeah, I mean, the obvious one from a P&L, it just keeps our operating costs low. If we only pay for what services we need when they're, when the services are provided, we don't have to keep that labor roll and keep that, assets on our, on our books. So it definitely helps from that standpoint. It also helps from just a pure investment when you're doing that's all I've ever done is new product development, new technology my whole career. It takes a tremendous amount of capability to be able to develop those technologies. And when you don't have to, I think, it was mentioned earlier, like 3D printing labs, and you have, 30 3D printers sitting down, you don't have to actually buy those, which are quite expensive, and the materials, and you just pay for what you need. The ability to be able to source, literally within days, if I need to scale up an operations team to do a build, I can actually use people from the other businesses and space to be able to put together some of the inventory we're trying to build. So it's just very, very flexible and also very cost effective, which is, of course, with startups, you're trying to, your P&L is a big deal, right? Keeping your burn low. So.
Yeah, Lincoln, I have the same question for you. What does it mean to you to have that support? And I guess from a perspective of somebody who may not have a Hall Labs, right? What does that collaboration mean to you? How does it support you? And I always think I recommend to everyone, let's think collaboratively about things, right? Let's think in a way that can be abundant. And so you have that plugged in already. I'm curious what that means to you, and what it does for your business. And maybe we can also talk a little bit about people who may not have these resources, what they might be able to do, because this is an incubator, and we can design other types of incubators if we're thinking collaboratively. So Lincoln, what does having back-end support mean to you, man?
Yeah, so clearly, I think I'll echo what Chad has shared here, that having that back-end support has been a key contributor to getting Smarter Home to where we are today. I do think it's worth probably teasing them apart, because you can have a back-end support, you can have the same kind of network anywhere. It doesn't have to be in a qualified opportunity zone. I think we have kind of the double benefit of operating within a qualified opportunity zone and also operating within a structure that provides these benefits in this incredible incubation environment to help these businesses grow. So there's that double benefit that has helped, once again, when you think about what does it take to take an idea from inception to commercialization, there is no shortage of great ideas that have died on the vine. There's no shortage of incredible businesses run by great people that don't make it. And I think what the back-end support has done has really enabled our business to stay focused on those key elements that are critical for growth. Especially in today's environment, like everyone else, we have incredible supply chain challenges. Our lead times are extending. Our availability with global supply chain shortages is tough. And knowing that we have fewer things to deal with on the back end so that we can stay focused on those things critical for our success has been worth its weight in gold. I do want to emphasize, though, that if I look at qualified opportunity zone for this business we could pick up and run anywhere. If we could have the same structure, we could move to Texas or anywhere overnight. But one of the great advantages that I would say we've had is that it's not only been helpful in addition to this Hall Labs environment, this ecosystem we've been discussing, the qualified opportunity zone status has brought a couple different benefits. And one is that it has helped attract key talent. I'm an example where I came in and didn't just show up to help get a job, but I brought money to the table and I invested in the business because of the qualified opportunity zone status. And similarly, as we're also in a capital raise, so we're running between a $5 and $10 million raise to continue driving the growth that we've seen. We've been challenged with triple-digit growth here for now a couple of years, and that provides some unique challenges for our business. To have the qualified opportunity status coupled with the back-end support to help make sure that that fundraising can take place seamlessly, enabling me and my team to stay focused on that business operation, that's made all the difference in the world.
Great insight there. Thank you, Lincoln. Michael, quickly, I just wanted to ask, to kind of come full circle here. These companies, can you tell us a little about how they come to fruition at Hall Labs?
Yes, we've most of it's internal. I'd say we've had some businesses that have come in, but something we like to say here is ideas are a dime a dozen. We really do believe it. It's worth less than a penny, right? So there's plenty of ideas always coming, but I'd say kind of our criteria, early on is it a big market, big enough market? These projects, these developing these technologies, it always takes way longer than you think and costs a lot more money. So we're looking for, our sweet spot has been where we need to at least believe that there's a 100, 200 million plus exit, those kinds of markets that would support that for us to go after them. And then I'd say our processes help us to the saying around here is drown the puppies. So we're an engineer playground and everybody comes up with their invention and they love it, but we're very quick to get things to get it out on the market, get it validated, so that we can move on to the next fantasy, right? So I'd say that's what we're very good at is identifying problems for customers, big segments. We look at the white space, but then we're very open to just starting. Sometimes I'll admit it, there's solutions looking for a problem. And we accept that. That's part of it. Sometimes an engineer comes and they here's my baby, this precious, amazing idea, this fetish that they have, but we're very quick to maybe it's something, maybe it isn't. So we give people a lot of latitude, and then lots of freedom, and then we just run through and then see if there's something there. And so that's part of my job is to keep this evergreen. And then what you see end up going to revenue and really where it gets up to where the Hall Venture Partners, the Opportunity Zone Fund, that's kind of, those are the winners, right? That have gotten through the lab that are marching forward.
It's great, and I do want to bring this full circle. There's a question that I have. This is for Will and Dave to kind of jam about for the last 10 minutes, unless there's anybody on the panel that wants to add anything before we kind of switch gears slightly.
If I could just add one additional thing, Alicia asked a question earlier about, an investor interested in just what looked to be the property. I do think it's important to note that if you're exploring a qualified opportunity zone status and you're coupling that not just with the real estate, but with an operating business, that does require a little bit of a different mindset here from investor. On the one hand, you get the collateralization of real estate that makes a qualified opportunity zone investment feel that much more secure. But you're not likely to see the same kind of upside that you can when you're able to invest in a qualified opportunity zone business. And I think that's one of the key differentiators that you might have to do with different investors or people that are looking to raise funds, is help them to understand the difference between, you'll be able to get a cap rate return plus the tax benefits of a qualified opportunity zone. But when you couple that with a qualified opportunity zone business, there is a risk return trade-off. But the upside can be significantly greater, where you get not only the growth of an early stage business, but then also these incredible qualified opportunity zone benefits.
Yeah, well said. Can I jump in there and add something to what Lincoln just said, Chris?
Please, Will.
All right. One of the things that impressed me when I went up to the Hall campus and interviewed and looked at everything firsthand was the options. And Lincoln touched on it just now, and I know Matt's an expert in this and tax strategies and that type of thing. But really the option that it gives you with these mature companies that are getting traction right now in solving real life problems in big addressable markets, with the significant patents that are already attached in value to those patents, gives you a really unique opportunity to have options in that 7 to 10 year or 15-year period where you may want to have money come out based on a potential exit or other opportunity, and go into another mature company and not have to go back to something that you're not sure of or defeat your tax strategy. So the options that the mature portfolio of Hall portfolio companies gives you on a tax advantage basis is truly, I think, very risk mitigated. Of course, I'm biased, but certainly gives you a lot of options that you're not going to get with a piece of real estate, no matter how how solvent or attractive it is. So I just want to kind of throw that in there.
Yeah.
With higher taxes coming, last thing I'll beat my drum about, with higher taxes most probably coming and supply lines strained, Lincoln touched on that too. There's no better time to take a hard look and get educated and get comfortable with opportunity zone operating businesses.
Well, thanks, Will. And that's what this is all about, right? There's an educational layer to this. And I think I'd like to encourage, if people have been taking notes for the last 10 minutes, because whatever you're doing in and around OZ or launching a business, everything that everyone said throughout this entire panel is incredibly beneficial and valuable. Dave, if you could chime in, I'm going to piggyback off of what Will just said. I have a specific question, but there's also one in the chat that says, how many investors with capital gains money from each companies are on the panel in total and size of investment? I don't know if you can disclose any of that, but can you get into some specifics and just talk about the sheer scale of
I
this?
can talk in some broad strokes, and I'm happy to connect with that investor offline too. But just to kind of follow what Will had said, I think as a fiduciary, there's an opportunity here for people to diversify their portfolio. And I'll never tell someone that they shouldn't invest in real estate or they shouldn't invest in an operating business, but I think there is room for both. But I think based upon the way that the plan has been rolled out, it's clear to me that one of the ways to mitigate risk is to be involved in a multi-asset fund. So, and that's just common sense. Being in a multi-asset fund, whether it's real estate or operating companies, gives you optionality on multiple investments to succeed. And that's kind of the key to what's been created here is mitigating risk, creating optionality, and looking for like-minded people that want to be part of building something. And we're very thankful and humbled that people kind of joined the call to learn a little bit about what we're doing. But we're also very transparent and open about how we've done it and willing to share. And I think that's one of the biggest things that was behind OZworks Group, and Chris, frankly, what you guys have done such a great job at is similar to kind of what Hall has done. And I was an operator and a CEO of a company before too. And it's easy to get bogged down with things that you're either not good at or that you don't like to do. But what Hall has done is it's allowed people to focus on execution. And I think if people use OZworks Group in the right way, it can help them focus on execution also, because there are a ton of resources within your network and kind of members that all the people have to do is come and ask. Because everyone that I've met so far that you've brought to the table, Chris, it has been unbelievable. And it becomes a two-way street.
Thanks.
And just to answer the capital question in broad strokes, the general partners were half of the capital for the first fund, and we are now doing a fund extension. So where we had a bunch of interest at the end of the year last year, and we were closing the fund at the end of December, but we decided to open another vehicle that was a parallel vehicle that allowed people to invest, because frankly, I didn't think, and Matt didn't think it was the right way to start a 10-year relationship by making people have to make a quick decision. And what it allowed them to do was have more time to do due diligence and get to know us and the whole process and feel comfortable with what they were doing.
Dave, thank you for the kind words. And I did put a link and I didn't throw you and Will under the bus, but I did mention like these two guys are in our community and they're accessible through that and as
No problem.
are
Happy to
a lot
help.
of other resources.